Welcome to the Forex, and here we're looking at the US dollar. The low at 79.80 here is the 61.8 retracement level from the previous move up through here. All the indicators, the stochastics and MACD, all were being oversold at this point, and they're crossing over, giving a buying signal now. We don't have a 5-wave move up through here. In fact, the 61.8 retracement level from here to here comes in around the 80-50 area here. So it could fail from this point here, and we don't have a clean impulse wave to the upside. It counts as 3 waves. However, the strong move up would suggest that it's got the personality of a 3rd wave up. So the little move back in here could be the 4th wave. So we'd want to see the market find support on 80.30, and support on 80.30, the top of group 1, is the next leg up that separates it from the 80, so the orders will start to build to the upside. So it's really all about the orders building up, or the pattern building up on the 80.30 there. So at that point you could go long from that point, with expectations of this high here being taken out as such. So just on the sort of 15-minute chart here, we just need to see the 30 become the support here. A move back down into this little area here gives it a basically a negative bias, I guess, but while it's above the 80, it's fine. And the euro is the same, but the opposite. So the move down from its high here is currently in 3 waves as well, and this is the 50-60% retracement level here. So we need to sort of respect that, even though the personality is of this move here is more like a 3rd wave. We need to keep them both on the table, but we would probably go with the 3rd wave being here, and if that's the case, then we'd be looking down for 1, back for 2, down for 3, back for 4, and down for 5, then an A and a B and a C wave back up here, and then a stronger move to the downside. So this would be the selling sort of area. In terms of pattern, we need to drill in there and have a look at the pattern as such. So the move down here, as I just mentioned, is the wave 1, or the A wave. 2 will B, 3 and C. So it can, find support in this area here and then move up from here. If it's an A, B, C, it can just hit here and move straight up. So for any short trading, we need to see things fall into place. So 1, 2, maybe the 3rd wave down here a little bit further, the 4th wave here, 5th wave probably a bit shorter because there's a lot of support here, then the A, the B and the C wave here that can pull back up 50 or 60% of whatever move comes down through to here. The 136.50 would be the 2nd level of supply here if it found support on 136.30. So we could expect to see failure from this area here or this area through here. So that's something to keep an eye on there. The Australian market also turning as well. So this is quite sort of significant, really. We've got a few turns in the market. So if that US dollar does move to the upside, then the top of this particular structure here can also be in play now as well. And so from this low here, we've been looking for 5 waves up here. We've got 2 counts for the Australian dollar in this big picture here. This one here is the A wave, the B wave and the C wave here, ending this correction, and then we're moving up here, making a further high up here, and in the process up here we're looking for 5 waves up through here, and we feel those 5 waves can be in place now. So if that is the case, we've got 5 waves here, then we'll be looking for an ABC back, which basically brings us back to the 90 area through to here as wave 2. There is an alternative count as well for this, which leaves the this market here actually as a wave 4 to here, and this would be an A and a B and a C wave to here for wave 4, and then we'll be looking at wave 5 making a new low here. So this one here is just as valid as well, so we just need to work through it step by step, but there are trades that we can take in here, and if we drill in, this is the alternative count here. Well, it's not the alternative, it is even another one, but a bearish one all the same. But the main point here is that the 5 waves that we were looking for to the upside here, the 1, the 2, 5 waves for the third, the A, the B, and the C here for the fourth, and then the fifth wave, the 1, 2, 3, 4, and 5 here. We thought there was going to be one more little push there to the upside, but that's not the case. So the 50, 60% retracement level is back down at the 90 area through here, and this move back down through here can be, well, a simple A, B, and C, but in the bigger bearish picture, this would be wave 1 and 2 and 3 and 4. So wave 3 would be really strong here. So we will attempt to figure this out and look for the main short trade within here. This move down through here too. If it's corrective, it can be 5 waves down for the A wave, or it can be 3 waves down for the A wave. Now, if it's 3 waves down here for the A wave, then we know that this is going to be an A, B, and C correction, and then we'll go further up. If it's got 5 waves in here, then it's still 50% chance that we can go wave 1, wave 2, and wave 3 down. So that's one little thing that we'll be looking for in this particular move down. But as it stands at the moment, we need to go in there intraday and count the structure from the high up through here. Now, it can be counted down as 1, 2, 3, 4, 5 to here for wave 1, back for wave 2, all the way down for 3, 4, and 5. So from here, we'd get the A, the B, and the C for a little A wave, then the B wave in 3 waves, probably a bit further apart than that. That will probably be level with that supply, this will be level with this, and anyway, that's a 50-60% retracement level. So yeah, basically an A and a B and a C, and then moving down lower. Now there is also another little count in here which I need to point out as well, is that it's not that it makes a big difference, because we'll still be looking for this AB setup over here, but this would be 1 and 2 to here. This would all be the third wave to here, and then this would be the fourth wave to here. So there's another move down to, well, it can just do this really. It can just push up to here a little bit to the wave 4, 1 lesser degree here, and then move down from here. So that's something we need to accommodate as well. But the main point here is that we want to see a nice big correction here for this A wave, B wave, and C wave. We want to see, a nice, something that's going to be the same sort of, if this is 60% in terms of pattern size, then this one needs to be 40, so to speak. So we need to see that right proportion. We need a decent sized picture. Once we've got that, then we can look to short. So this C wave here, that will have 5 little waves in it through here. The A wave can have 5 or 3. It will probably have 5, in this case being wave 2, but 5, 3, and 5. Then you can look to short it, and even the fifth wave should have 5 waves in it as well. So that's what we're looking for there. The Euro Australian, it's still looking at it as a wave 4. It's just expanded again. That's all. So, and we'll be looking for 5 waves here, 3, 4, 5 here, and then folding from that point there. Now, I also have to point out too that as the market gets through this 14580 here, it creates overlapping wave structures with another larger structure over there, and puts this into a bullish mode here. So what we're going to do, and either way, we'll get 5 waves up here. So in the bullish count, we would be looking at this being an A and a B and a C here, and then finding support on here. So if that's the case, then we'll take our long trade from there. Otherwise, we'll be looking, if this really moves down through here, then we'll be looking for our short trade over this side over here. So we've still got a session or two to go. The US are at holidays, 4th of July tomorrow, so the volume may be lighter in some of these markets, but let's just wait to see what we get in this particular area over here. The yen crosses, might just have a look at the US dollar yen as well. So what we're looking at here is on the daily chart, this is only a 2-hour chart. On the daily chart, we're working through a large triangle pattern, and this here now makes wave D here. So our short trade target for the 101.30 was fine. We didn't get the 101.20, the pivot within group 1, as resistance. If that's the case, then we'll be going down further. So this particular move up here, we're going in 3 waves from wave D to wave E here, and then this will be the main sell-off area through here. This is what we're looking for to short, really. So let's just observe this market move through up here in 5 waves for wave A in this case, an A and a B and a C for the B wave, and 5 waves up for C of E. And then we'll look to short once we've got this completed, this 5 waves completed here. We'll look over here for shorting. So the pound yen, we were also looking and trading this long. We had some long trades in here, but the main point here is that what we can see here is that, first of all, old high here, and this old high here, we've been tracking this 5 waves here, 1, 2, 3, 4, 5 here. So either way, we're going to get some type of correction across here. Now, it can fail from this point, or it could move up from this point and move here, but either way, we'll be looking at it over there. So if you've been trading long to here, then exit at 175 thereabouts, and then we can look at, just be patient and wait for this correction here, and then we'll take it on board from there. So this is how I've got it counted to the upside here, the 1, the 2, all the way up for the 3rd wave, the 4th and the 5th wave here, and then some type of A, B and C here, or down for 1, back for 2 if there's going to be a top in here. But I think that we need to go with the A and the B first. But the market is definitely overbought at this area here on the daily. So, and the pattern fits that we're going to have some type of correction across here. So just give that a session or so to work itself out. And the Euro Australian as well, just on the 4-hour chart here. I want to give both sides of the count here. So this particular, we've had this move down through here, of course, and we're looking for wave 5 here, but I just want to be cautious as well, because this could be down for wave 1 here, and then back for wave 2 at 61.8 just here as a nice A, B and C here, and fail down here. So this wave C here just extends to the downside, 1, 2, 3. So we've got to get past this 3-wave structure. So in this C wave here, we've got a very clear 1, 2, 3, 4 and 5 here. So really, if we see any upward movement here, then we know we're dealing with wave 3 and not wave C. So we just need to get past this little juncture here, and I thought I had it on the intraday there, but I haven't. But you can see quite clearly that we've got 1, 2, 3, 4 and 5 is finished here. So look for a 61.8 retracement level through here as wave either failing from this point, or we'll come back on here and get support here and so forth from here and move up from there. Let me just... Okay, just on the 15-minute chart from the 138 here, we can see this move up through here as wave 1, back for wave 2. Then we've got all the 3rd wave up here, the 1, 2, 3, 4, 5 up here. So then we've got this wave 3, where ABC for wave 4 here, and then wave 5 here. So we're basically going to see, one way or another, we're going to see a corrective pattern in this range here, and we need to work out if it's going to fail from the 139, or this is just a big ABC correction here. But either way, I think for the short term, best to just stand aside, take any money off the table, and we'll pick the thread up once we understand what we're working with. All right, thanks for listening.